Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Welcome to the Global View on this Friday. Let's take a look at what's going on at a macro level. The US two-year Treasury yield jumping 5 basis points, pushing it above 5%, in fact, to its highest level since 2007. And the 10-year yield, that was up more than 9 basis points to close above 4%, as investors bet on further interest rate hikes in the wake of stronger than expected jobs data. The ADP report revealed private payrolls jumped by 497,000 jobs last month, almost double the forecast, which shows the labour market remains resilient despite the Fed's efforts to slow the economy with its monetary tightening. Meanwhile, job openings fell more than expected in May, with the JOLTS survey dropping almost 5% to 9.8 million. And initial jobless claims increased slightly for the week ended July the 1st to 248,000, just above the estimate, but still below the 280,000 economists believe would indicate a significant slowing in jobs growth. And the non-manufacturing PMI rising to 53.9, entrenching the services sector firmly in expansionary territory, where it's been for 6 straight months. And the latest data reinforces the view of Dallas Fed President Lori Logan, who says there was a case for a rate rise at the June policy meeting, saying, "I remain very concerned about whether inflation will return to target in a sustainable and timely way, with the continuing outlook for above target inflation and a stronger than expected labour market calls for more restrictive monetary policy." Well, money markets now seeing a 95% chance of a quarter point hike at the Fed's July 26th meeting and a 28% chance of another hike in September. And the US dollar eased after initially bouncing higher following that US labour market report. The Aussie dollar has strengthened. It's at 66.6 US cents. Well, US Treasury Secretary Janet Yellen has begun a 4-day visit to China that was expected to focus on easing ties between the world's two largest economies, despite low expectations on both sides. Shortly after arriving in Beijing, she said she was glad to be there and looked forward to advancing President Joe Biden's goal of deepening communication between the two countries. And she tweeted, "We will take action to protect our national security when needed, and this trip presents an opportunity to communicate and avoid miscommunication or misunderstanding." All right, for more on China and beyond, certainly what we're seeing in the tech sector, Brad Gasworth joined me from Unearthing Opportunities.
We've talked about this. There's a very narrow leadership right now on the tech side, and you got a handful of them that are still doing very well. I expect that AI consortium, which includes some of the largest global tech companies in the world and the largest listed in the United States, to do well. They're continuing to buck the trend. They're performing well this year, but I still see money going into them because AI certainly is the theme that everybody's going to want to invest in over the next several years. And, the bigger companies are actually the leaders in many areas.
All right, Brad, so let's take a look at what's been going on this week, and certainly in that space, big news out of China, plans there to put export controls on two metals involved in chip making. Interesting to see, of course, this comes as Janet Yellen has just landed in Beijing to try and improve that trade relationship. What those restrictions due to hit at the beginning of next month, what are the implications?
Yeah, Andrew, this is really I think one of the most important things to talk about right now. It's super timely. With China putting export restrictions on gallium and germanium, these have big implications to the semiconductor market. Gallium and germanium, even in the aerospace market, these are, metals that are used in everyday production of semiconductors. So putting a curb is going to have an impact. Now, The U.S. started this with the whole tech war, several years ago. But this is bad, and this is something that I continue to see that, if you look at some of the rare earth, the materials and minerals, China is the leader and has the most out of every country out there. They can put the squeeze on it, and looks like what they're going to do. So you had a couple companies benefit, AXTI, MP, on the U.S. side, both traded significantly higher, I think over 10% higher on the news, and I expect them to actually do well and continue to rally post this.
Well, let's just come back home and turn to the latest broker moves. Macquarie, they've given Silver Lake Resources an outperform rating, saying that the company's cash generation is set to impress in the coming financial year. The broker says record sales were achieved by Silver Lake in the fourth quarter of the last financial year, despite the company dealing with forest fires. The target price there is $1.70. Morgan Stanley has given CSL an overweight rating, saying a segment of the company is at risk of disruption from a competitor. The price target is $325, which is certainly higher than the current range. And Macquarie has given ASX Limited an outperform rating and a price target of $65 a share. Brokers saying that the future volumes are stable and predicted to increase from the previous corresponding period. All right, now let's just check in on the latest corporate news. Some miners out with updates today. Regis Resources expecting to achieve record production of gold in the financial year of 23, somewhere between 450 and 500,000 ounces in total. At the end of June, the June quarter, the miners said it had cash and bullion build of $39 million. And it says as it begins to head towards reporting season, as we head towards reporting season, let's just switch to Aris Resources. There we go. It's withdrawing a guidance for financial 23 due to production problems at its Jaguar and Mount Common mines in Queensland. The miner expecting operation and capital costs to be within guidance there. All right, so let's just check the markets now. Of course, we saw a day of heavy selling yesterday. That is looking as though it's going to continue today, picking up where we left off, with SPI futures down 1.25%. This is after what we saw on global markets overnight. In fact, all the major indices on Wall Street were down fairly heavily. I'll just get to that just to reiterate where we ended up there. So a broad sell-off, S&P 500 and Dow both suffering their biggest daily fall since May, in fact. And that was off the back of the latest ADP private payrolls report. This, of course, ahead also of that key non-farm payrolls report that will drop tonight, our time, out of the States. The mega cap tech stocks, they limited some of the declines there. Microsoft and Apple actually ended higher, but all S&P 500 sectors actually fell, led by energy stocks. They were down the most. That sector down 2.5%. Consumer discretionary stocks also slumped. And just in terms of corporate news, ExxonMobil, that was down heavily after it forecast a sharp fall in second quarter operating profits. And JetBlue, it nosedived after indicating it would follow a US court ruling to end its alliance with American Airlines to protect a planned purchase of Spirit. Now, of course, this comes ahead of second quarter earnings season, getting underway in the next few weeks with Refinitiv data forecasting S&P 500 earnings to fall more than 5.5% from a year ago. All right, that is a truncated version of the global view, but as I say, the interview with Brad Gasworth will be up on our website shortly. Stay with us, the Open is just around the corner.